Good morning, everyone. I know it has been a while since I have made one of these. It has been a roller coaster of a ride of a week here in the cable household. Both kids still home from school today. They will get to go back next week. Don't forget, Monday is actually a holiday, so markets here in the U.S. are closed, so obviously we will be closed. But let's take a look at a few things technically that I really want to talk about. Of the weeks for me to not participate in the market, I guess it wasn't so bad, right? Look at this. Look at this fall that we've had. Now, we've been here before. We've done this before. In fact, if we go back and look, let's look back a little bit further, right? We can see that we've had these big moves. Let's look at it. It's a little neater on the SPY chart versus the future, right? So this big yellow line, if we move this out, I'm going to put this on a weekly because, again, a little bit easier to see. This yellow line here, I have a trend line drawn in there. This yellow line coincides with the pandemic move, right? So that's just the length of it. You know, it nothing to do necessarily about where it is in the chart. It's just the length of it measured from top to bottom. This is what it looks like, and when I drew that in and put it in on the highs that we hit there in right at the first of the year, it came down and it touched this gap. Now we have these two gaps down here, and gaps are significant in the SPY. You don't see them here on the weekly chart, but they are significant because we fill nearly every gap. The good news is we now, if we go back over here to the daily chart, we now have these cute little gaps up above too. So we have, we have one from yesterday, we have one here, we have one here, so we have some other gaps that those two will be filled. So I guess, we have that one that's really close below, and then we have these other two. The other thing to note here is this trend line that we have drawn in here. You can see that we used it for support. Yesterday we came right back up and used it as resistance. So that'll be our first kind of line in the sand. Now this morning we are, if we opened up right now, we would be gapping back up from yesterday's close. I think, wait, let me see. Yeah, from yesterday's close, but we are still inside yesterday's candle, so there would be no overall gap, just an overnight gap. The bounce here that we're looking at this morning is pretty meager. It's not, we're not seeing a big run. However, we are in some names, so let's keep that in mind. So if we flip over here real quick, you can see very choppy here over the last hour or so in the, this is the pre-market data, very choppy. And a lot of talk, right? So a lot of talk of what happens now. There was an awful lot of speculation that if the Fed went ahead and did this 75 points, that the market would then rally. And it did for a hot second, and then it did close higher, but it closed so far off of its highs, and then came in yesterday and drew all that back down, and then some, right? Now, one thing I did notice when I popped over to draw in my lines, and I'm going to go back to the quad chart here for this, because I want to put these side by side. I'm going to put it on a 3-day. Okay, so here's what the SPY looked like. But the VIX didn't move. If we do a 1-day, 5-minute, this was the VIX yesterday. So although it creeped and climbed up, and we hit, 900 points down at some point during the day, do a 1-day, 5-minute. Make that look cleaner, right? So our SPY came in pretty sold, and although it went down, this was not, again, we are seeing these big moves, but they're not panic selling. We're not getting those flash crashes that we've seen before. That we've sat through, probably, I don't know how long you've been trading, but some of you were around when we had the China trade talk under the Trump administration, and we would see these algos pick up on one headline or another, right? And we would be whipped around, and we would move up and down 5, 6, 7, even 1,000 points in a heartbeat in a day. So this is not something that we're not used to, depending on how long you've been trading. But the market is trying to digest everything that's coming in, all of this inflation. And I do want to take a minute. This video is going to be a little longer because I haven't done one in a while. But I do want to take a minute and talk about inflation as well. And kind of what I see I think, there's so many opinions. Are we in a recession? Are we about to be in a recession? Are we technically in a recession? Are we not? Oh my God. And to be honest, however you label it, it doesn't matter. Market's in a downtrend. We're all going with it. That's the way it works. So stop trying to label it. Now, I know that for studying, you want to say, okay, if it hits these benchmarks, that means a recession. I get that. But stop focusing on that and start paying attention to what's actually happening right in front of us. Okay, so here's the SPY, and it broke VWAP a couple times, but for the most part, that was our tell, right? We couldn't stay above VWAP all day. Nice measured move. And the VIX still only at 34.82 was the high yesterday. I find that really interesting because one thing that analysts do keep talking about is that complete capitulation in the market, where we get one of those VIX readings that's 40, close to 40, and maybe a little bit over, and finally just flush everything out and reset. We haven't really seen that. We've seen a lot more, it may not feel like it, but a lot more measured selling here into the news that we're playing against. So speaking of that, let's go ahead and talk about oil. And this is the one thing that, and this is my opinion, and it for what it's worth, right? My opinion here, the reason interest rates are being brought up, a couple of reasons. One, we have to. We should have done it more than a year ago. We should have just done some incremental quarter basis, 25 basis points, to start kind of tightening things up. And instead, we allowed this market to sit on the stove, and now the pot of water is almost completely gone. Right? You let water boil too long, all of a sudden, right? It just all evaporates. Well, that's kind of what the Fed did. They allowed this to cook so long, we almost have no water left. And if a recession, a true long, deep recession, is on our doorstep, which I think most people are leaning that yes, it is. How long it lasts, well, we don't know that. That's a very different story. But the Fed then has to have some of those tools to be able to help us out. Well, they took all the tools out. They took them out. They threw them out. And they didn't go back and collect them. So now they're trying to do that. So we have to do these interest rates. Typically, the reason you raise interest rates is to tighten up demand. So everything is supply and demand. It doesn't matter what you're talking about in the market. It all will come down at some point back to supply and demand. We have huge demand, but not just for energy, for everything, right? Because the pandemic, which again happened to our market, wasn't something within, happened to our market globally, not just us, globally, shut down those pipelines for goods, for raw material, for food, right? And then, of course, and that lasted 2 years, right? In China is still saying these kind of rolling and smaller lockdowns, right? So we are not back up on the supply side. Supply is dwindled. Now we layer on top of that this March a food and agricultural issue when Putin decided to invade Ukraine, because now we have all of this grain, all of these chemicals and pesticides and fertilizers that we use, all of a sudden it's gone, right? So now we have a whole nother level of supply chain issues, right? So those are things that are happening to us, but the overall being that supply is very limited, but our demand has not really changed. So typically what happens is they quash demand so that supply has a chance to build back up. So that's the theory of raising interest rates. I get that question a lot. That's the theory. It makes sense, right? Kind of make things a little more expensive just to do that. But here's the problem. Why are things so much more expensive now anyway? Well, obviously, because supply demand, they can get more for it. We understand that. But the other very important layer in this is energy. Russia is now, pretty much blackballed from most of the market. And energy touches every area of our life. You may not think of it. I don't care how green you are. If you're buying your solar panels and your electric vehicles, okay, I'm all on board with that. But that green energy is made with non-green energy. It's just the way it works. Everything, whether it's transported, in its production line, in its packaging, if you look on your desk right now, do you have one thing that's made of plastic? And if you do, it is based off of a petroleum product. And that is it, you may not like it. I understand that, but that is the way. This is what we have. And making this big move to green energy, I'm all on board with it. But it needs to be a transition. It's not a all or nothing. That is causing a lot of problems. So, kind of a little tangent there. But energy itself touches every area of our life, whether it's the truck driving the goods to the Walmart, us taking our kids to school, ordering something online, right? And then how it's made. So the biggest self-inflicted gunshot wound that we have right now is energy. And we could change so much of it, and we're not. I honestly believe that if we could just do that, if we could just put out and say, okay, America, full on, because we are the largest oil producer in the world. I know a lot of people don't believe that, but we are. We have amazing refineries. We could upgrade and build new refineries if allowed, and it would be amazing. It would be better technology. The things that we could put into place in a new refinery now versus the analog ones that we've been using from 50 years ago. Oh my God. But anyway, so if we could just do that, that would do a lot of things. It would help everybody because we all have to put gas in our car. Or we're all buying that gallon of milk that is now $1 more than it was a year and a half ago, right? That would help. It would go a long way. It would build up consumer sentiment, because the one thing that we still have to do is we still have to go to work, right? So we're still relying on energy. So if we could just do that, it would help the supply side, I think, immensely. Now, why do I bring that up? Because raising these interest rates, although technically should, squash that demand a little bit more, which is going to happen anyway because we can't get the darn goods. I think it's a little late. I think it's needed because we may need that tool later. I think it's needed because, well, it should have been done a long time ago. But we are in a position now where just raising interest rates and making things more expensive for everyone else is just a tax on everybody. And the people it hurts the worst are the ones at the lowest income levels. And that is kind of my concern moving forward. And it's a very tricky spot for the Fed. And Jay Powell, I did listen to the conference. The press conference, he did say, this is what we can do. They can only deal in monetary policy. They can only affect demand side. They cannot affect supply side. And he needs help on supply side. So hopefully someone out there, really takes, understands the supply side a little bit better and will actually do that, open up that supply. Oh, I have a little visitor in here this morning. You want to say hi?
I want to color your paint.
You can color this one.
Okay.
All right, so all of that on inflation now. I've got little girl in here. You want to say hi, everyone?
Hey.
No, you're just going to take my paper? But my paper has my notes on it. Okay, go ahead. Well, there goes my paper. All right, so that's something that we have to keep in mind until we're willing, until the administration is willing to open up a lot more of that energy. I think we're in for a really rough ride, and that overall is going to continue to weigh on the markets. That will continue to push us further down. And the reason I say that is because, a lot of people ask, well, should I just be in cash? Is this a buying time? There are a lot of people out there right now saying this is a buying time. This is a great buying time. Look, if you have an average cost basis, you're looking super long term, this is your IRA, yeah, this is a buying period. Is it time to buy it all? No. You buy in pieces, and that's what the whole point of that, having that cost average is all about. So, and she's back. Okay, but there are a few charts here I want to look at today. And the only ones I really like, you can probably throw a dart at a wall and find something that's bouncing. Totally get that. But if you want something a little bit easier to play, and by easier, I mean have a really good set of rules, look at Netflix here. I know, this chart has been beat to holy heck and back. So we had this nice green candle on Wednesday, Thursday. We came in, very tiny candle, but it's an inside candle. So this, you can set it up both ways. If we move to the top side of this candle, so anything over 176.27, you would be a long. You would use yesterday's candle, the low at 171.56 as a stop out period, or flip that around, you would enter at 171.56 to the short side and stop out at 176.27. If you want that even tighter, because that's the high and the low, you can use as a stop the open and the close. So still enter as it breaks through the previous day candle. So again, you would still enter at 176.27, but you would stop out at 174. That tightens that up to only about $2.30 there. So Netflix is one of those inside candles. Chewy is another one, and I'm just putting these out today because these are...
Hey, Mommy, it's a turtle.
Oh, thank you. That is a good turtle. These are very good to use for, to have a really good set of rules and to not let emotions either way really take you over. So Chewy is another inside candle. It's also touching that 34. We've mentioned that 34 a few times back here. A move over that for a test of the 50, or if it goes short, a test of the 20 in Chewy. I noticed Neo, right? So actually some pretty decent relative strength here in Neo yesterday. Inside candle, Doji, look for that to go to the long. I think this one might actually go to the long side here, more so than the short side. Nice support down here with the 20, the 34, and the 50. So Neo is another one of those that I would look at. I know, she's a hot mess. ROKU, right? Nice little inside candle. This chart too beat to holy heck down here. And just below the 8. But again, if you have a really good set of rules and don't let the overall market really just play with your emotions, play just what you see, these inside candle days can be a very good way to go. Use those stops, honor those stops, take the smaller loss rather than holding on, and just see your account bleed out. It is one of the best things you can do for your account, is to take those smaller losses, and then when you have the winner, hold on. Oh, now we have crayons too. Do I need crayons? You want me to use those for my work?
Yeah.
Yeah. Okay. All right. And then last one here that I found was, thank you, Lexi. Nope. TTWO, little inside candle. Really nice squeeze here as well, with the moving averages. So this one I really like. You want to go give this to Daddy? Here, go give that to Daddy. Really nice squeeze of the moving averages as well. So we'll watch that for an inside play. Remember, using either the high and the low or the open and the close as your entry and exit. Speaking of oil, we do see it coming down just a little bit. Still holding on to that 34. Overall, this still looks like a bull flag to me. Gold, a couple of decent days in gold, but today coming back in, of course, as markets move back up, bouncing here a little bit. Gold coming back down, but using that nice, that 200. So keep an eye on gold if things start to turn a little bit more sour. And then XLP of the sectors, really like XLP. Now XLP will probably move down today with this bounce of the market. But if you, oh, actually it's not. It's still green. XLP is, the staples market. So that's your Procters and Gambles and things like that. These are things that we have to buy anyway. We're going to buy cereal for our kids, or maybe for yourself. I don't know. Right, so the consumer staple sector is a place to look for some overall safety. Of course, we've seen all sectors red here yesterday, but this might be a good one here to take a look at. The XLP, and maybe some names in there like Procter and Gamble, as I just mentioned, General Mills. See, Procter & Gamble actually did pretty well yesterday. General Mills bouncing off the 200. That's a pretty nice one. Actually, I really do like that one. I didn't look at that one earlier. Right, nice little double bottom. We have earnings coming up. So that was a very good reversal setup there. Reversal setups today too. You can play those. We're seeing. Let me try that one more time. We're seeing the Qs taking just a little bit of a bounce overall. Still looks like a bear flag, right? This was a bear flag that we had. So this still looks like, until we get a really good push up, this still looks like a bear flag. And yesterday's move was on higher volume there. So that's also something to kind of keep a look at. SPY, higher than average volume yesterday as well. The move started out with a little bit less, then it really picked up steam in the afternoon. So kind of just overall a very rough move here for us. So be cautious, protect your longs. You know what? Stay in day trades for right now. But if you are looking to average in some very long-term plays, look to your big companies, your companies that have a lot of cash, that have a lot of buybacks going on, because they're buying their stock back at this cheap price for a reason. It's definitely a good signal that maybe if you're looking to add for like 5, 10, 15 years, this is the place to do it. One other note, Google is set to split on the 16th, 15th, I don't remember. But start looking at Google here if you want to be in for the split. Overall, Google had, just kind of looking like the rest of the market, but looks like a nice little W pattern potentially setting up here as we get ready to go into that split. So, okay, that is it for me today. I know this is way long of a video. I apologize. It's been a while, so maybe you guys were due for it. But if you have any questions, reach out. Heather C. at givingtreetrading.com. And again, kind of another day where it's going to be rough with the kids home. And I'm losing my voice now, too, so yay. All right, I'll talk to you soon. Thank you guys so much for being so supportive. You are the best family ever, and definitely keep me humble.